October 19, 1987. Over New York City. Traders sip their coffee, eyes glued to glowing screens. The Dow Jones hums and ticks up, 40s up, from yesterday's close. Whispers of unease flicker through the air, but optimism reigns. No one knows yet. In hours, the world will shatter. Billions vanish. Panic will grip the streets. And Wall Street will never be the same. The 1980s. America roared like a lion. Reagan in the White House, deregulation fueling the fire. Junk bonds, leveraged buyouts, yuppies in power suits chasing the dream. The economy boomed, GDP climbing 5% a year. Unemployment dipping below 6%. Inflation tamed, oil prices low. It was the era of excess. Champagne flowed on trading floors, fortunes built overnight. Wall Street, a golden temple. Stocks soared. The Dow had doubled in 5 years, from 1,000 in 1982 to over 2,700 by August 7. Investor pension funds, everyday folks, betting their retirements on the endless uptick. Buy and hold, they said. The market always climbs. Portfolio manager touted new tricks. Portfolio insurance, a safety net of computerized trades to hedge against drops. Sell futures automatically if prices slipped. Genius, they called it. What could go wrong? But shadows loomed. Warning signs, faint at first. Interest rates ticked up. The dollar weakened against the yen and mark. Trade deficits ballooned to $60 billion. Overseas, morbid Hong Kong down 11 the week before. In the U.S., whispers of overvaluation. The price-to-earnings ratio hit 20, sky high. Rumors swirled. Insider trading scandals from the year prior. Ivan Boesky's fall still fresh. Was the game rigged? Manipulation in the air, big players dumping shares quietly. Regulators asleep at the wheel, blind to the tech revolution. Program trading, those automated beasts, now 20% of volume. Computers deciding fates faster than humans could blink. Then, the storm gathered. Friday, Oct 16, Black Friday's prelude. The Dow plunged 100 points, over 4%. Weekend headlines screamed unease. Treasury Secretary James Baker's tough talk currencies rattled nerves. Monday morning approached like a thief in the night. October 9, 1987, 9:30 a.m. The bell rings on the New York Exchange. Orders in sell. Why? A cascade. Asian markets tanked overnight. European bourses followed. In New York, markets opened down sharp. Portfolio insurance kicked in, computers dumping stocks en masse. Human traders, sensing blood, joined the fray. By 10 a.m. the Dow's down 200 points. A murmur rises on the floor. Phones ring off the hook, brokers fielding frantic calls. Clients. Get me out, they plead. But lines jam. Systems overload. The ticker tape lags 90 minutes behind. Prices? A guessing game. Traders scream across the pits, arms flailing. Sell at market, chaos builds. One specialist, sweat-soaked, handles a dude orders for blue chips, IBM and GE. Shares plummet, IBM down $6 in minutes. Midday. Noon hits like a hammer. The sell-off accelerates. Program trades fire in waves, billions in automated sales. The Dow's lost 300 points now, over 13%. Panic sets in. Floors echo with shouts. It's crashing. Everything's crashing. Brokers huddle, faces pale. Rumors fly, insider dumps. Foreign DSCs nowhere in sight. Rules lax on these new machines. Illegal? Maybe not, but it feels dirty. Traders accuse each other. Who's front-running? Fears of fraud grip the room. One veteran trader later recalls. It was like everyone scrambling for lifeboats. Outside, everyday Americans feel the quake. Retirees in Ohio watch their nest eggs evaporate. A schoolteacher in California, her 401k halved. Factory workers in Michigan, pensions tied to the market gone. billions in savings, trillions in market cap vanishing. By 1 p.m. the Dow 400. Hearts race. Is this the end? Afternoon. The freefall intensifies. 2 p.m. Another wave of program selling. Computers relentless execute orders without mercy. Human attempts to buy the dip, swallowed whole. The Dow dives past 500 points lost. Percentages blur 18%, 20. Traders collapse at desks, some weeping. Phone systems crash nationwide, AT&T overwhelmed. Specialists refuse orders, markets seize. Blue chip stocks halt trading briefly, but the bleed continues. Minute by minute, down 21%. Threams 0, screams peak. Stop it. Somebody stop it. Closing bell. Soft lens falls, then stunned murmurs. The Dow closes at 538.7558 points. 22.6%. The largest single-day drop in U.S. history. Over 500 billion in market value erased, equivalent to $1 trillion today. Globally, a 1.7 trillion wipeout. Traders stagger out, shells of themselves. One broker mutters, "We just lived through Armageddon." Aftermath. Washington scrambles. Federal Reserve Chairman Alan Greenspan acts fast, flooding banks with liquidity. The Federal Reserve, consistent with its responsibilities as the nation's central bank, affirmed today its readiness to serve as a source of liquidity to support the economic and financial system. Banks open credit lines. President Reagan downplays. All the business indices are up. But fear lingers. Investigations launch. The Bradenton Commission blame on program trading, portfolio insurance, regulatory gaps. Rumors of manipulation probed, though few charges stick. Insider fears amplified, leading to tighter rules. The fallout ripples. Everyday losses sting deepest. A widow in Florida loses her home savings. Families delay college, weddings. Unemployment ticks up briefly. Globally, markets rebound unevenly. Japan weathers, but echoes in '89. Long-term, Wall Street transforms. Circuit breakers introduced, halts at 7% drops. 1320. Program trading curbs. Electronic systems upgraded. The crash births caution. Diversification preached. Tech safeguards mandated. No more blind faith in machines. Yet the scars remain. Black Monday exposed the fragility, the house of cards built on greed and code. Economies recovered, the Dow climbing back by 9. But the lesson? Markets whisper warnings. Booms hide busts, and in the quiet before the storm, hubris reigns. Reflect now. In today's world, algorithms ruling, crypto swings, inflation battles, echoes persist. Fortunes rise fast, fall faster. Money, a illusion, fragile as glass. One day, prosperity, the next, ruin. History doesn't repeat, but it rhymes. And when the next whisper comes, will we listen? If this tale of chaos and consequence gripped you, subscribe. Return for more shadows from the financial abyss. Because markets don't crash without reason. They warn. And sometimes the scream is deafening.